The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 2nd, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free, pick up that phone right now. 877-927-6648. Of course, internationally, 727-445-1044. Would love to hear from you. Of course, you can send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have a totally flat market out here. The Dow's off 3 points. The S&P is totally flat. This down 1 penny. The NDX is off 8. The NASDAQ Composite's down 8. The Russell's off a couple of points. So no real movement. The semiconductors are up 37 cents. Strong semiconductors. New York Stock Exchange is up 3. So the transports, on the other hand, they're getting a kick in the pants out here, or a kick in the head, or a kick somewhere. Down 96 bucks. That's off 1%. So there's your struggling indice. Gold is up $9. Silver's up 2 pennies. Light sweet crude is back 20 cents right now. Lead the charge here to the upside dollar-wise. You've got Meade Johnson up $15, 22%. IDEX Labs up about 10% or $12 and change. Khaki International, not to be confused with Khaki Cousins, but Khaki International, and you probably would not have even confused it. Nonetheless, it's up 6% or about $8. Amazon is up 6. Ameriprise Financial is up 650. AutoZone is up 6. Costco is up 6. To the downside, it is Snap-on. Snap-on, I imagine that's the tool company, down 8%, $14. Auto Live, Auto Live, Auto something ALV, that's down $10 or 9%. Ingredion, yeah, that's how you pronounce it. INGR is the ticker symbol, off $10. Ralph Lauren down 10. CSG Systems off about 10. Edward Life Sciences down about 10. Cirrus Logic down $9. So we've got plenty to look at to the upside, to the downside. I want to look at what you want to look at. The first request that came in is, as it was put, the usual. Gold, the GDX out here. So let's go take a look at gold, the GDX for Duffy. Let's go get the message of those that area of the marketplace. Let's start by taking a look at this chart here. This chart, now I've got the continuous contract up on my screen here for both gold and silver. If I had the current contract, it would be showing us the same. This way I can go back and get historical data if I needed it. What we're taking a look at, you're going to see kind of like a set of rainbow lines in the price area. You're going to see there's blue, green, and red. You're familiar with Stevie's red line out there. And then just below that is the price oscillator. Now, the price oscillator here is helping us to identify what's going on between two exponential moving averages, the 19 and the 39-day moving average. When you have a rising price oscillator above zero, which is what we have for gold right now, how do we know it's a rising price oscillator? Because when price is above Stevie's red line, you know in a heartbeat. When you get these little convergences, that's where Stevie knows that we are at that zero line. There is nothing more bullish. I could probably come up with a couple of things, but for the most part, we like to use the expression, there's nothing more bullish than a rising price oscillator above zero. You can see that in the case of silver down below, we also have a rising price oscillator above zero. What does this mean? Nothing could be more bullish. This means that prices are going to continue to move higher. What would negate this pattern out here? Very simple. Price would have to close below Stevie's red line in either gold or silver. We're not there yet. At this stage here, it acts as a level of support. Just, hey, I want to go down and test it, then potentially reject it, and then continue to move higher. Now, it works like this for all instruments. That's why you and I take a look at it. That's why we look at my red line whenever I'm looking or analyzing a chart that somebody's requesting information on. It's going to be different on each of the time frames out here. But in the case of gold and silver, all looks very good, looks very bullish out here. Is there any caution? Duffy had asked about the GDX. I'll just switch over here to take a look at the XAU. Then we'll go take a look at the GDX, right? We like to be thorough here. And if we take a look at the GDX, one of the things that it did off of its low out here back in December is today it actually got to a higher high. Now, when it got to a higher high, if we just simply start doing the wave count from looks like the trading session of December 20th out here, today happens to be wave number 7. In this case here, it's the letter G on my screen as opposed to the number because the other numbers that I have on my in each of these candlesticks are referring to Tom DeMark counts, either setup, sequential, or combo out here. Now, it's either a 7th wave move or it's really just wave number 1. I'm going at this stage here with wave number 1 because price came back and tested that little oscillator on change line back on January 27th, rejected that level with the very next day when price moved above it. So I'm saying we are really just in wave number 1 when we take a look at the XAU out here. I imagine it's the same for the GDX. Whether it is or it isn't, it's close enough. So that's what it is communicating to us. Let me switch over here to some other charts. Now, an analysis of gold or silver would basically be worthless if we didn't take a look at what's going on with the other paper currencies out there. And so as we go take a look at the 10-minute chart here, now this is for the yen and gold, and it's also got bonds. Why don't we just eliminate the bond piece of it for the moment, because the question was really about gold. And what we can see here is you can just see the symmetry. You can see just how closely correlated these two instruments are. This is a 10-minute chart, and therefore you get to see it, right up front, kind of like so-called tick for tick. It's not exact. It's directionally accurate out here. And that is as Tom likes to say, a beautiful thing. Now, if we take a look at the daily chart, that was the yen futures that we were looking at versus the U.S. dollar or the Japanese yen U.S. dollar currency pair. And that's where we have a little bit of a conflict. Now, the conflict is with regard to its TAS market profiles. So if we look at the futures contract for gold and the futures contract for the yen, which is what we're looking at, what we can see here is that the futures contract for yen, or yen futures, has been up above the daily TAS market profile for the last 3 days out here. That is another bullish signal that a trend has changed because price is above both the weekly and the daily out here. A little slightly different picture if we go look at the currency pair, but at this stage here, we're going to just stick with the futures contracts, just simply to be consistent. Now, in the case of Goldilocks, it still needs to contend with its 1235.60, or that is the April TAS market profile high from a weekly perspective. If we looked at the February contract, we're above it right now. All bodes well for gold, the miners, silver. Now, we'll take a look at the GDX specifically when we come back because that's what Duffy had asked. And then we'll move on to something else that you'd like to take a look at. Email me, Steve at TFNN.com. Give us a call, 877-927-6648, or any ping will do. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. It's weird having a little trouble here with one of my charts, but we're going to go take a look at. So I said we would go look at the GDX, but and I didn't lie to you. What we're going to really do is look at the components, the primary components of the GDX. So Barrick Gold, just in order to be able to give us a good feel for what's going on. So Barrick Gold is a number one weighted stock inside of the GDX. And right now, today, what it's doing, it's taking on its swing point, a couple of them. It's taking on a swing point from back here on November 2nd, which had 25 million shares. Now, today, we're at 12 million shares. We can both do the straight line math to say you're past that swing point with light volume. It's also dealing with the swing point from September 22nd that has 18 million shares. So in that case, it's actually coming into an area with decent volume. And then it's got this downdraft here with 30 million shares from August 24th. That is where I would pick is going to be the real fight inside of Barrick Gold. It's going to be right here, which is somewhere between, whoops, I should really try to grab the right spot. Now we're up above all profiles. So let's just simply go ahead and turn those off out here. And that way the line that shows up on my screen, let's make it a red line. Do we want a red line? What color line do we want? Purple. Let's make it purple. Purple, often not used in technical analysis, but it is here. You're seeing it right here, right now, and that's at 1973. Maybe it's not purple, it's chartreuse or something like that. So between 1973 and 2005 is likely where Barrick Gold is going to run into some resistance, some significant resistance. Those folks back in August who went ahead and bought this equity thought, man, this is a good buy. And, of course, they didn't think it was such a good buy when it got down to the lows out here and it gapped down with volume back on December 15th, and it got down to 1381. That's a pretty decent haircut. That's a 50% haircut. So you can see how it's moving up into a supply line potentially. Now, those folks here that are holding it, they would listen to the show and they would say, you know what? I'm going to go ahead and hang on to this. Not only has it gotten back here, but what Stevie is indicating to us is that we are seeing a large change in trend here, and now you can go ahead and ride it to the upside. I mean, my goodness, you rode it to the downside. Why not continue to ride it to the upside? Because that's where it's going to perhaps pause in price, not that the move is over. So that is in Barrick Gold. Looks positive. Again, some resistance around 1973. If we look at the number 2 weighting inside here, we'd be looking at Newmont Gold. If we take a look at Newmont, it's taking on its swing point from back on January 5th with 10.4 million shares on very light volume. In fact, we can see a little shooting star out here just to show you how difficult that volume area is for it to get through was on January 24th when it had volume of 8.5 million shares. So we're coming into that with light volume, and that was compared to the 10 million share day out there. And then it's downdraft from back here in November with about 11 million shares. Not bearish, but it's just going to simply struggle to get through this area. Once it's through, once it's over this range here, there's no reason for it not to get back to its August 24th area, and that's going to be in the 42.50 range. You're trading at 36 as we speak right now. Let's look at number 3, Gold Corp. GG is the ticker symbol. Trade out at 1638. Dealing with really the prior swing out here at 13.5 million shares. You're at 4.5 today. So you can see that. Now, remember, the direction of these mining volume isn't everything. Volume is just one aspect. In fact, if we were to take a look at, we haven't done this in like what seems like forever. So now the question is, can I find it? And the answer is, yeah, of course I can always find it. The question is, can I find it quick enough? But here is the actual, so when you're taking a look at, if I was going to share with you one thing, just one thing as Curly would like to say, I don't know who Curly is, but yeah, you do from that movie out there. You know that movie with Billy Crystal out here. What's this change my default? No, don't change my default, whatever it is you're trying to change out here. But you always want to make sure when you are doing some technical analysis of a stock that you understand the trading pyramid. It's like the food chain pyramid out here, right? In this case here, you want to go ahead and break the areas of any stock you look at into 4 areas. The first area is certainly going to be volume, supply and demand. Volume is just one tool that you could use out there. You can use the money flow index. You can use on-balance volume. You can use the volume rate of change out here. Just use one of them. Become a master of one of them. I suggest using volume at the swing points because that is where certainly the market does talk, walk, and squawk. There goes that royalty payment to Tom. But the second level that you want to be taking a look at is momentum, right? For momentum, Basil loves using the stochastic. I like using the relative strength index. You just simply, and others like to use, the ultimate oscillator, the Williams percentage R oscillator out there. I say just use one. In fact, if you put 2 momentum indicators on your chart, you're just simply getting a lot of information. And some of it you don't really need. You're just kind of getting noise out there. You also want to be able to have some type of weight with regard to what's going on in the volatility or the liquidity. Now, you can use Bollinger Bands, you can use Keltner channels, you can use standard deviation. There's a number, and to list of tools that I have here, this is not like the be-all to end-all. There are others that work for these different categories out here. And then you want to understand that energy or that angle. That's a power law vector indicator that our favorite polar bear has created is an amazing tool. If you don't have that tool, you can go ahead. Basil is a master with regard to the MACD. I take a look at the MACD only from the standpoint of looking at the price oscillator value of it. So you want to go, Garo, we know he uses the parabolic SAR, right? He's measuring energy, right? Not necessarily the angle, but energy in the angle. Those are 4 components. I heard David White do a segment, it might have been a couple of days ago, where he was talking about the different weightings in essence of each of these different areas. And for each different equity or commodity or currency, the weighting that you would apply to these different 4 areas should be and would be different. Now, that means then, therefore, that in some instances, volume or supply might have more meaning or less meaning. In this case here, with regard to the ETF structures out there, because of the way that those ETF structures with regard to SPYs, Qs, diamonds, and so forth are being used out there, I say it has a little bit less of a meaning versus what's really going on inside the equity futures contracts out there versus that. That's my take. That's my experience. You may have a different experience. But what you want to do is you don't want to rely just upon just one thing out here. Make sure that you become a master of any of these 4 areas. Use whatever instrument it is, and those would be the things that you would want to go ahead and have on your stock chart. So do I want to? Yeah, I want to close all the tabs out here. So with regard to Gold Corp, where I was really going here is these equities are going to go ahead and move in the direction of gold and silver out here. And gold and silver are going to move in the direction of, the yen. So whether you're taking a look at the U.S. dollar, Japanese yen, you're looking at the Japanese yen, U.S. dollar, whether you're looking at the futures contract, just make sure you have your correlations all set there because they are all impacting what it is that we see out here. So I know that was a long way, Duffy, to maybe let you know what was going on. So if just take a look at the GDX, since that was really one of the things that he had asked about, let's go take a look at it. We're going to come up with light volume, right? We already know by looking at the components out here that the volume today is like 24 million shares out here, going against really the volume of 120 million shares. That's right, 120 million shares from November the 9th. Now, we're trading into that swing point, or it could even be the swing here from November 2nd. That has 114 million shares. So you can see we're moving into that area light. Does that mean you should unload? Look, if you are in this from a long-term perspective, expect the resistance to be 25, 35. But these equities are headed higher for a lot longer period of time as well. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, Tom, I think that answers your question as well with regard to the GDX, Nugget, and JNUG. We've got a request here from Tarpon2 to take a look at Rio Tinto. RIO is the ticker symbol out here. Now, in the case of Rio Tinto, What currency pair does this is this one impacted by Tarpon 2? Do you know? I don't, but I'm imagining that there is a currency issue here. But in any event, let's just simply go take a look at it. Right now, it's trading out at 44.51, and this thing is up above all profiles, daily, weekly, and so forth. With regard to what it is attacking out here, what is it attacking? Let's put this on a little bit longer-term view. Let's put this on a weekly chart as we take a look at Rio Tinto. Now, this is going to give us a little bit better let's get rid of these profiles so we don't have these on here as well. So UK-based company. Thank you, Duff. So could be influenced a little bit by the Great British pound out here. I don't know. We'd have to go ahead and put that on the stock chart. But with regard to where this is headed to, let's take a look at just simply first the just typical A to B equals CD price projection. So the swing point out here that we're going to look at is the week from April 18th, and it had a volume of 32 million shares. As this was being passed, it was right here, 29 million shares, which is not more than 32, but pretty darn close. Nonetheless, this has and continues to form an A to B equals CD pattern. Let's go see what the price projections are on Rio Tinto out here with regard to it. We can see that it's already above the 1 to 1.272. So what this would tell me is that the price is headed to the 49.01 level. Between 49.01, 54.22. Now, it's in the process of trying to form a Gartley sell pattern. The first Gartley sell pattern that occurred out here, it failed on. That was right here at this 1-to-1 level. This week here of December the 12th, that was a bearish engulfing candle, had a little bit of a move to the downside, and it just simply it's simply a pattern that failed. Again, nothing more bullish than failed bearish patterns out here. The next time on a weekly basis that one could form, well, I don't know when that is. We'd have to see a reversal candle. So a lack of a reversal signal out here. And even though it's at the 0.618 retracement area, this is on a weekly basis. I'm referring to from the high out here that looked like very close to an island top. Was this a weekly island top? Let's find out. The week of February 17, 2014, the low was 59.17. What was the high the week before? 58.95. So there is a gap there. How about the following week? The high of 59.06 versus 59.17. How about that? So when Rio Tinto formed its high out here, the high that I'm referring to, by the way, is back in 2014. February 17, 2014. You don't see this often. So if you and I were writing a textbook, looking to be able to identify how important are island tops. Now, you've heard me say this before, and I will stick to it. Island tops and bottoms on individual equities are more significant than inside ETF structures or something that has some type of underlying instrument, such as a currency pair. And this we're going to consider, even though it may be influenced by the currency pair, that's really not the predominant. I'm sure we would find out that it's not the dominant or predominant aspect of the way that the Rio Tinto trades. Now, we'd have to go back and prove that. Nonetheless, out here, a weekly island top pattern that really led to that low, believe it or not, all the way down into January of 2016. So we certainly want to pay attention to those. We want to always look for those out here. But the short answer, which I would have given to you a long time ago, I probably did, was it looks to me like Rio Tinto is headed to the 49.01 to 52.33 area. Ticker symbol there, RIO, not like REO Speedwagon, but it's making a nice little speed wagon to the $49 area out there. So let me see if we've got any other requests out here for something to take a look at. I don't see anything yet in the email system. So let's go switch back to, I don't know, let's go switch back to the markets. Should we do that? So we kind of covered gold, and I do like that who was it? Was it Duffy that put that here? Duffy said the answer, my friend, is blowing in the yen, not the wind out there. Who would not like that song out there? And I think Duff, you ought to do a remake of that for gold out there. I mean, very, very smart thinking. I like the way your mind thinks out here. Now let's go take a look at what's going on. What are we going to pay attention to inside of the equity futures markets out here? Let's go take a look at, David White's good at doing those digital, songamajigs out there. We're going to look at here inside of the equity futures market and we're at 30-minute charts right now out here. What I'm watching for, and I believe is going to happen. Who reports today inside the NDX 100? Is it Amazon that is reporting today? Because we've had Facebook and we've had Apple, right? I think Amazon might be out there. I'm watching right now with regard to the 30-minute chart. I'm watching the high from between 9:30 and 10 yesterday, which is 58.25 out here. The reason that I'm watching this is because there was a Gartley buy pattern that formed inside of the 30-minute chart here for the NQ. You might say, what the heck are you talking about, Steve-O? Well, here is the what the heck am I talking about. Oh, I might have to change this. I might have to change the settings on this A to B equals CD2. But a nice little shooting star here yesterday at 9:30 in the morning. Makes a move down into 11:30. No surprise there. And then it moves higher throughout the day. Into 3:30 is when it makes its high out there. So your A to B equals CD. That's only got the 1.618 out there. So I do need to make a little bit of a change. So I beg your pardon to do that. I had turned that apparently off. So you've got the, oh, that's interesting. So we'll just do the 1-to-1. Whoops. So we've got the 1. We've got the, put 0. We've got 1.272. Now, these are the expansions that I'm putting in here, and you'll see them just simply add themselves to the bottom, 1.680. Oh, what the heck was I smoking there? 1.618. So we had a nice little Gartley buy pattern that had formed out here. You can see the 1-to-1 A to B equals CD pattern. So that's all that's really required from a Gartley. Of course, you like to take a look at what was the retracement. So the retracement here from low to high, and the low that I'm referring to is back on about 12 noon, January 31st, to the high here yesterday, just about a 50% retracement. Less than a 0.618, just a little bit more than a 0.382, and that is potentially very powerful. Very powerful, because if you take a rubber band and you wrap it around your finger as hard as you possibly can and only back it off by 38% and then let it go, what kind of explosion do you have? Explosion is probably not the right word to use there, but you know what it is I'm referring to. You have a lot of energy versus having it back off by a 0.618 level. Now, time is also a factor to have in here, but it is possible that if this little shooting star from about 9:30 in the morning on February 1st gets taken out, that what we will look at inside of the NQ is a move to at least the 1-to-1 A to B equals CD. That's 51.94 out there, maybe 52.14. And that, my friends, is where the NQ will likely head to, because at 51.68, is the top of its TAS daily profile. That is the target. 51.94, 51, what did I say? 51.68, in that range. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So the chart we're looking at right now on my screen is the Great British Pound down at the bottom, just to see if there is any type of correlation here with regard to Rio Tinto. And the answer is no. So we don't have to worry about that as far as an influencing factor with regard to Rio Tinto. So let's go ahead and delete that page. Where does it say delete that page? Where does a close page? Now it's going to ask me if I want to save it. No, I don't want to save it. Okay, so let's go back and take. We were talking about. I was speaking to you about the NQ and one of the possibilities. So there's no question, and I've been consistent with regard to this. There are no question. I can give you 6, 7, 8 different reasons why you should be short the market, short the indices out here. I mean, topping patterns like that are very significant and major topping patterns out here, whether it be island reversals, whether it be seventh wave moves, whether it be price relative strength divergent patterns, whether it is the advanced decline oscillator reading. I mean, I can just list them, you know, and I've already kind of given you some, right? Not for every indice out here. And in fact, the market where it has topped at those signals, in fact, it has topped. But the market has not been able to break through support. Not at all. But in the meantime, we'll come back to that. Let's first go out to Brent in California, because we always like to hear from Brent and know what he's doing. So, Brent, thanks for calling. Thanks for holding. How are you doing this afternoon, this morning?
I'm doing great, Steve. Thank you for taking the call. How are you?
Very good. And Celodex Therapeutics. What does Celodex Therapeutics do?
We had talked about this one in the past, and I bought and I actually sold the position up around $4. It may will move up, and then there was some stuff that came out. I know Donald Trump was talking or something about, you know, the drug companies are making way too much money, and a bunch of them took a hit. And so I was out of it, and I've been watching it. And my question for you is, I thought it was curious. There was a day a couple days ago. I'm in at 320. I bought it the other day, but there was this big volume day. But really, nothing kind of moved, kind of a doji little candle there that a couple days ago, and then
January 31st, right?
Yeah, it's starting to make a little bit of a move today with some volume. But I just thought that was curious. A big volume day, but really, you know, kind of just the neutral as far as the movement that day.
Big in comparison only to the prior days, but not big in comparison to the breakout. And we know how you love to be able to spot breakouts and wait for things to come back to those breakout areas. And that's what this equity did, Brent, CLDX, folks. And we're looking at the breakout session from November 8th, which had volume. This was volume off of the bottom. So it's exactly what it is that you like, which was 7 million shares and wide price spread. And so on those days out here, and Brent's asking an excellent question, on January 31st, there was good volume, 5 million shares, still not enough versus the up volume out there from November 8th, but no wide price spread. Like Brent was saying, really kind of a doji-ish type style candle. Really, it's a spinning top, so it was spinning its wheels, so to speak, out here. And so, good to pay attention to the volume there, but without any kind of wide-ranging bar to the downside, I think your analysis is spot on with regard to going and trying to ride this thing back to the upside again. And today, you're getting a nice little sign of strength where you've got 2.7 million shares so far. The other benefit that you have and what you're going to want to watch for is, first, this was a really huge wide profile from a weekly standpoint, and I'm referring to the green lines out here. And because that point of control is so close to the bottom of the box out here, and it never got down to the bottom of the box. We got it at 307. Brent picked it up for around 320. I mean, sounds like a pretty nice move out there. And it's trading at 338. So because you're inside this very wide-ranging box, this little consolidation type area, there's no reason for this to not run back up to the 459 area. An indication, Brent, that that's what it wants to do, that that's what it intends to do, regardless of somebody saying they make too much money. I mean, that seems like kind of like yeah, they probably do make too much money, but aren't we in a capitalist society out here? In any event, that's neither here nor there. What you want to be watching for is the price point of 341, okay? 341 is its brand new, just formed today, TAS daily profile. And being able to close above that would be another nice indication that, yeah, a bottom is in on this equity. And the last thing that I will do, CLDX, is punch it on my other system, and it's not picking up today's activity, but it looks like what price is doing, if I put this chart over here, it's also up above its oscillator unchanged line, which looks like that's at about the 330 level. This is priced out right now at, 339. So that says that the bottom indicator down here, the price oscillator, has turned up. Of course, you'll love to see this get above zero when and if it does that. But you've got every indication right now today as of 1:47 p.m. that you're in the right trade out here. So does that help?
It does, big time. Do you have a moment for one other, Steve?
Yeah, absolutely. Yeah,
it's in the same type of area. It's a different stock, and it's been one that's been completely crushed. Is Valiant? Which is that? Is that
VRX? What's the symbol there?
That's
VRX.
right.
Okay. Now you don't mind if I tell subscribers to go ahead and buy Celodex, do you?
No, more people the better.
Okay, all right. Yeah, you want some buyers. So if we take a look at Valiant, is that how do you pronounce it?
I guess I call it Valiant, but it could be Valiant. I don't know.
All right. I don't know, but I thought maybe now you're in on this one?
I'm in at 1370.
Okay. Trading right now, folks, at the 1430 level. And at the price point of 1377 was this huge gap to the downside, folks, on November 8th. And that was 96 million shares. And the first time that was tested was on half the volume, 41 million shares. The next time, in essence, that really this was tested was on only 12 million shares. So the sellers are just simply not there as we speak inside Valiant Pharmaceuticals. So, it makes sense to me. What this doesn't have, or maybe it's having today, is its first sign of strength. I'm going to go ahead and turn off the profiles. That way it's a little bit easier to see. We can turn those back on. But we can see the volume kind of ticking a little bit up. Right now we're at 19 million shares, so I don't know if that's maybe the equivalent of 25, 26 million shares, something like that. So it looks to me like the target on this becomes that swing point high from January 10th. And there's where you'll probably have to make some type of decision. That's anywhere between 1610 and 1755. If we take a look at some of these other areas of potential supply or resistance, that's what it actually hit today, the top of a daily profile. So you're going to want to see this close above, not necessarily today, but you're going to want to see this close above 1486. At 1486, that would then suggest to me, Brent, that it's going to go tag that January 10th area. We don't know if it's the high or the low, 1610 or 1755, but if it's coming in with accelerating volume, says 1814, maybe even the 1875 type area. So I can see all the reasons why you've taken a trade in Valiant, VRX being the ticker symbol out here. When do they report earnings? Do you know?
I think they made some kind of announcement today when they were going to do it. I want to say it was towards the end of this month, like the 28th of February.
Yeah, perfect.
Well, thank you very much, Steve. I always appreciate it. You're always a big help, and have a wonderful day, okay?
You too as well. Thanks so much for calling.
Take
That was
care.
Brent in Martinez, California. Folks, you should look at VRX, and you should look at Celedex, CLDX, courtesy of Brent. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So before we went to that call with Brent, we were taking a look at the daily equity futures contracts. I had made the comment that I can give you all kinds of topping signals. I mean, significant. I have to look at my face, it's because when I shave and stuff like that. When I look in the mirror, each morning or what have you, I look at my face and have to say, really? You haven't pulled the short trigger yet with all. I mean, these are signals that you die for these signals. You would write a book and you would say, you get this signal, you just go ahead and execute. What I do want to do is execute myself out here, and I could be wrong, and I'm not, but I'm ready to act if I'm wrong with regard to it's still too early to jump to the short side of the trade. Now, this is a little nuance. You know how I share with you the expression, the body of the candle is truly the essence of price. When we take a look at Japanese candlestick charting, that's where we really get our information, which is from the bottom of the candle. However, the wicks of the candle, especially at times like these, can be very subtle, but can be providing us with a bunch of great information. Take a look at, since we have been consolidating here, since we've been consolidating sideways, and really to a certain extent, the consolidation's gone on since December 13th, right? So we're well over 6 weeks, 5-6 weeks into this consolidation. But I'm just going to come right here from January 12th and look at that candle, or look at the candle session on the 19th, or look at it on the very next day on the 23rd, or how about this week, the 30th, the 31st, even yesterday, even today as we speak right now. Which side of those candles is the largest wick, is the largest lower shadow forming? And the answer is that larger lower shadow is at the bottom. That says that, yes, somewhere during the day, during the evening, sellers have been able to step on the gas to move price down to that area. But at the end of the day, and I do mean this in this case here, at the end of the day, the contract close day for the ES mini contract out here, it has been the buying pressure that's been able to push those bears back. And that's telling us something about this market. It is not ready to head down. If we just simply add our profiles out here, we can see that we have not busted through a single level of support just yet. In fact, the ES mini has been so weak out here that it has not even been able to get down to the bottom of its TAS daily profile, 2256. Folks, that is telling us something. It's not been able to bust it to the downside. Now, any close above 2275 today says you go run back up to the highs, maybe even take them out. So watch now, I don't know what the candle close is going to look like today, but if we have another longer lower shadow on the bottom, it's actually communicating to you and I that it is not ready to move to the downside. I'm not saying that we're not going to move to the downside. It's just saying not so fast. And then you've got the NQ out here, right? And if we take a look at just simply the NASDAQ equity futures contract, weeklies are nowhere to be found here. On the daily, you are inside this trading range, right? 51.27, 51.68. It's going to bust out one side or the other, or it's at least going to go test the high, 51.68. There is the potential, that makeup on that short-term chart, that short-term 30-minute chart out there for the NQ, where we have a Gartley buy pattern. Once it gets above that swing point, then that releases the information that says, okay, we're going to go ahead and take that on and go up to its next level. Now, whether it's a 51.90-ish range or it's a 51.70 range out here, that is really the message of the markets. There has been no failure out here inside any of these indices as we take a look at the equity futures market. So that's just one man's take. But there's another man that's going to be up next. His name is David White. He is our favorite polar bear. And because it's Thursday, there's a man, gentleman, that's following him. That's Tom O'Brien. And after that, Andy Heck to take it on home. Have a terrific Thursday. We'll see you on Fabulous and Fantastic Friday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.